Last night, we saw the Japanese market basically self-implode, rolling over into the futures market today, with the Nasdaq having maybe its worst day in the past like 8-10 years. You were down at one point around 5.4%. I believe that was more than during the COVID crash. At one point in time, you had the Japanese market have its worst day since like the 80s, and it looks like things might continue. Now, I think there's one bullet point that we've been talking about over the past few days that are the kind of dictation of what happens in the broad market and what will kind of hold us. And there's a clear line in the sand that if you get above those levels, you continue to look good. Sorry for the location. Again, we're on the go, and I try to continue to provide the data that you need to know on the market specifically. So let's jump into it. Now, the most important thing that I'm watching is this right here. This is your Nasdaq, and as you can see, you're clearly at the 200 SMA. This is a level I've been talking about for a while now. If you break below this, you're bearish. You break above this, you look good. And giving you like a food for thought of like what's happened here, and we'll come into this here in a second. This is the weekly chart over the past basically year. Going back to 2022 in December, right? You held below it all of 2022. You were very bearish. You got back above in 2023, the beginning of that year, and then you ultimately just trended for until right now, right? Which you're back at that area right now. Now, I wouldn't say that you flip necessarily bearish just yet, because you're really making that decision as we speak. And why I'm kind of making this intraday video, because I think intraday is going to be a little bit more important now. And so when we look at this action, all you're really waiting to see, and I'll just put that level right there so you can see it, and this is the hourly chart, is are we going to reject, which is what we're doing right now on smaller time frames, or mount back above it. Now, again, I've been trying to keep you guys updated on Twitter. The link is down below so you can check that out. But the biggest thing here too is like you got to be watching this level, because for the next week or so, this could potentially set up one of the bigger traps maybe of the past 4-5 years, right? If you really can hold above this, what is that, 400 point wick of down to the downside, maybe even larger, like that would be monstrous. That'd be huge, but you won't really get a good view of that until the end of the week. The daily can provide a viewpoint here as well, but I think the weekly will paint the bigger picture. So far, the daily is holding below it right now. We'll see what the wait's on 4 o'clock. Now, a lot of the stress right now is coming back down to the Fed, right? We're going to go into the Fed here in a second, because I believe this could be the most dangerous thing for the stock market right now. We'll talk about that here in a second. If you don't know too, basically Japanese, and I said it earlier, your worst day since the 1980s. So again, 1987. Japanese stocks, the Asian market just got decimated. If you think our market's bad, no, their market's getting literally decimated. Okay, down 12% right on the day yesterday. They literally had to shut down the markets, right? Our market, thank God, we're only down 4%, right? Okay. Count your blessings, if you will, right? But the biggest thing is right here. And so you may have seen this on Twitter. I may have tweeted out earlier, but now you're getting this emergency Fed meeting that's going to be happening sometime this week, apparently. And we saw a price in effect of a 60% chance that they are going to cut rates this week. 60% chance. Now, why is this concerning? Okay, because now it puts something on the table of not only are you getting dragged down by the rest of the world and the rest of the market, right, other markets, but now you have this other stress of why you're bouncing now, is that there's a high possibility you're going to get this, this cut this week, which I do think it's a very high possibility. I think it's an extremely high possibility they cut this week. The question, though, is if they don't, or if they don't even meet, okay? So if they decide to not meet and they decide they don't need to do anything, which I think pretty positive meeting, but we'll see. If that doesn't happen, it puts more risk on the table, meaning if they don't cut, then you're probably going to just get annihilated back down. If they meet and don't cut, same thing, downside. And if they don't meet at all, then you're probably just going to get more downside. We go to the daily chart here too. You can see clearly where we're bouncing at. It's a pretty big level here as well. Didn't even mark it out on the chart because I didn't think we were going to be here so soon. You came right down to 17,368, your April lows of this year, right to that level, right? You can even see like here on the 5-minute chart, kind of a little double bottom in the after hours as well. Right here, Monday, 1 a.m., retest that level this morning, 7:45, bouncing back up. Really good mount, really good push. Potential double bottom here in smaller time frames. So that is a good view there as well. As long as you hold above basically 17,985, you look good. Or 18,000 flat, you look good there. So those are the technicals there. But I'm going to tell you right now that the technicals here won't matter as far as getting a bounce or getting anything like that, as long as this risk is there at the Fed. And if the Fed meets, I'm telling you, they don't cut, it's going to be bad. I don't care if it's a short term. They might say we want to wait till September. We'll see. But that's very important. it's also important to realize when we go back to this rate cut of what they're actually pricing in. It's not just a rate cut. They're pricing in, they have a 25 basis point cut here, but they're expecting more of a 50 point basis cut. I think they're pricing like a 40% of a 50 BP cut, which again has to alarm you as well, because again, if they come down with just 25, the market might not like it, right? The market just might not. And if we look at what's happening with yields as well, right? I think treasury yields are a very good viewpoint of what's happening here. They are definitely pricing in this drop as well. It's very important to understand that. You saw the drop in the pre-market. You're just collapsing here on the 10-year. You're getting a little bit of bounce intraday. But again, you came right down to 4% here on the 30-year yield as well. These are very big indicators, broad market. And we talked about getting below 4%. It's very bullish for the broad market, specifically the mortgage market and what's happening with the housing market, which will further help inflation if the mortgage rate can continue to drop, because rent prices would ease, because buyers would flood back into the housing market. But again, those are the concerns of what I'm looking at right now. Now, the other side of this, the more interesting part of it of day trading provides a little bit more of interest here, right? Look at SPY. Now, SPY obviously gapping down, getting destroyed as well. But you go to Edgeful and look at that data here, right? So this is if you go back to a whole year, you're going to see better action here on volume. Your average volume, 59 million on Mondays, but you ramp up towards 80 million on Fridays. Now, if we go to SPY's volume over the past, give or take, month, right, you've seen that average really low, 27, 50, like very low volume. Past 5-6 days, ramping up dramatically. 76 million on the first, which was Thursday. Friday, you had 82. Today, you're already at 77. That's going to ramp up closer, probably towards 100 million in volume. Now, I do always expect higher volume when we're breaking out in either direction, which obviously we're breaking out to the downside. Very important. You also expect higher volume when you're getting a reversal or finding a bottom. So this is a very interesting moment if this volume comes out at our highest volume yet, because it could signify a potential bottom. But again, what's the largest indicator that we're looking at here on broad markets? There's no reason to overcomplicate it. It's the Nasdaq. I mean, that's all you're looking at here. Is going into the end of the week, going into even just the daily, can you hold above 18.15? That is your major level. That's a line in the sand. That's where everything kind of comes together. Okay, very important to understand that. Other side of this, you're seeing things like Bitcoin, big dip overall, bouncing back. Again, you broke below 50,000 for a little bit, finding a bottom there. But again, you're below the 200 SMA. You don't love that either. So those are the biggest things right now. You're also seeing oil come down as well, which again, I think you're seeing broad areas of the market as far as inflation going to be showing really good signs at these next few data readings, which is also very important to understand. Because if oil continues to drop and you're seeing rates drop, again, very bullish broad market. Again, with what has been our biggest inflection points of dictating if inflation is dropping or if it's, getting a little bit of a bounce, right? Inflation kind of stagnating, right? That's been more on the energy side, but energy continues to tank back down. We're seeing mortgage rates also come in that direction as well. It's worth mentioning, I'm not going to have the data right now. They don't update till the end of the day. Very important to understand that. Yeah, your mortgage rate's fixed. Your FHA is going to be sub 6% most likely on the end of today. It's down almost 0.1% on the day. Very important to understand that. Yeah, your 30-year FHA is down to 5.75, down 0.35%. That's insane when you think about it. And you're going to see these numbers continue to move in that overall direction. Again, that's what we keep saying, right? You're seeing, obviously, your mortgage rates dropping and dropping and dropping. So when we look at the market from a viewpoint of, okay, this is terrible, everything's collapsing, you got to look at all the market. You can't just look at one specific area. Now, the big difference from right now to when we collapsed back in 2022. In 2022, mortgage rates went absurd. Mortgage rates are going down now. So again, these are deflationary areas that are going to definitely help the overall market, which you can disagree with me, but that's just my viewpoint and what I'm looking at here. Now, broad-based stocks of what I'm liking, okay? Very similar to the names that I've been liking for a while. I think NVIDIA has been great on these dip opportunities. I still like Apple. I think it's a little bit more risky. I had to close a lot of my position on Apple just because the risk was so much this morning. But NVIDIA 2026 contracts still are probably the best looking thing out there in my opinion. I don't know how you can love them, but that's just my personal opinion. But I definitely think the safest thing to do right now is just wait until you get back above 1815. Above 1815, you look incredible. You look very bullish. You look very strong. Massive signs of continuation to the upside if you break back above that, okay? So that's why I want to be very clear. Now, the other part of this, if you get back above 1815 on the Nasdaq, okay, if you get above this before we have this emergency rate cut meeting or emergency meeting and whatever, I think the emergency meeting will top anything and everything. So there's a lot of uncertainty out there. So I think going in blindly, going in like, crazy here, short dated especially, is very, very risky in comparison to what we've seen. Again, because this is just not normal. Pricing in 25, 60% of a cut basically this week is extremely risky. And the Fed has been, risk adverse to say the least. So those are things to be considering, to be watching. But overall right now, that's what I'm watching. 1815, biggest level in the market. The Olympics are going on, but I would say this is the second most important thing in the world right now is 1815, the 200 SMA. Again, I think the weekly tells you the story here on NVIDIA. And this is what you need to be paying attention to. So that's what I'm watching. If you have questions, comment down below. I'll see you guys tomorrow. I didn't get to go over too many of the actual plays that I'm loving right now. But really quickly, I will. Again, this is June 2025. If you want a riskier position, I think it does look good. I'm going to tell you right now. But I prefer, I will say right now, the January 2026. Jay's been huge on these. Love this position. Looks really good as well. You can even go further dated if you want. But again, I think that is the position that is like the most optimal at this point in time. June 2025 or January 2026 makes the most sense, personally, in my opinion. This is about a year till expiration, about 320 days till expiration, so it still makes a lot of sense there as well. That's what I was saying, specifically NVIDIA also. So those are the biggest things right now. I still like Apple, these other names, but again, I'm just respecting where we're at. I'm not just going to blindly go in. I'm not going to blindly do anything crazy here. So that's my viewpoint. If you have questions, comment down below. I'll see you guys tomorrow. Have a good one, traders.